So basically, I gave you a quick overview of myself. We've been doing cannabis insurance for close to 5 years now. We've seen the market when it was really slow, where we were having a lot of conversations with licensees and potential licensees in the state. And we were just talking about insurance, we were gathering information, but nothing really came of it, to where we are now, where it's constantly changing, moving very, very quickly. We have to be on our toes at all times and just realize that our clients expect a lot out of us. And we need to be there to support them in this endeavor because it's constantly changing and there's a lot of pressure on them as licensees. So with that being said, I'm just going to do a quick overview of what I wanted to talk about today. There's three main topics. The first one is insurance for licensing. So as you're going through the licensing phase with the MRA and the municipality, there's a lot of different steps and checkpoints that you have to reach in order to get your final license. And insurance is no different. Every municipality and state has different insurance requirements. So we're going to talk about what you need from a licensing perspective as it pertains to your insurance for your business. Once you get your license, that insurance that you purchased for your license really doesn't do much good for you once you're actually open and operating. So we're going to talk about beyond licensing and how that impacts insurance and the different areas of coverage that are available to you as a business. And then finally, I just wanted to talk quickly about some claims that we're seeing in the marketplace, especially here in Michigan. So that way clients of ours can properly prepare on how to prevent those claims. So with that being said, I wanted to jump in for insurance for licensing purposes. So the rules here in Michigan state that the licensees have to provide proof of financial responsibility. This is Rule 11. And within that, there are three requirements that the MRA places on licensees. The first one is they have to have $100,000 in liability for bodily injury per license. The second one is they have to have $100,000 for general liability. And then the third one pertains to secure transporters. And not only do they have to provide those two first pieces, but then they also have to provide commercial auto insurance. So a certificate of auto insurance showing that they have coverage. Now within that, I wanted to peel back a little bit of layers. I'm not going to go too deep into this. Just because I might lose people here because talking about, the details of insurance is never fun. However, the product liability is the first piece. That's the one that everybody's talking about. They have to get an attestation signed, and depending on the type of license that they're applying for, whether it's adult use or medical, there's a different attestation that has to be signed. So like I mentioned, for every license that you're applying for, you have to have $100,000 of product liability coverage. So a great example of this is we've got some clients that have, many licenses. So they would have to purchase $100,000 of product liability coverage for each license that they're applying for. And then we would have to get them an attestation for each license that they're applying for. So this is something that we spend a lot of our time doing. There's an attestation J if it's a medical, and then there's an attestation 2D if it's an adult use license. But that's going to be the biggest topic that we're going to hear is, I need the attestation for my license. And this is what it's pertaining to is the product liability insurance. The second piece that I talked about was general liability. General liability is going to cover third-party bodily injury that occurs on the premises. So the state requires $100,000 in general liability coverage. That's extremely low. We don't have any $100,000 general liability policies. However, that is the bare minimum that the state requires. And we would have to get that along with the product liability coverage. And then I talked about the commercial auto policy for secured transporters. So there's a couple things that we have found out just through trial and error of the past years that we've been doing this. The state does require proof of bodily injury liability limits on the commercial auto policy of $750,000 or more. And then another piece that comes to a surprise for most of our clients that are secure transporters is once they go through the final licensing, then they will get a request from the state requesting workers' compensation even if they've not hired an employee, they still have to be able to provide provide proof of coverage for workers' compensation. And then they also have to provide motor carrier form E. Again, not going to go into the thick of things here, but that's a form that is generated from the commercial auto insurance carrier. So those are really the three pieces that are mandated by the state in order to get the final license as you're going through licensing. And all different types of licenses would need to get those same coverages. So it doesn't matter if you're a dispensary or you're a cultivator, secure transporter, even labs, they all have to provide the same types of insurance. So after that, I wanted to go into what's beyond licensing. So I've talked a little bit about what the state requires. I also mentioned briefly that municipalities also have insurance requirements. I will say most of the municipalities will match what the state requires. Sometimes we see a little bit of differences. As an example, some cities that we've seen, they will require $1 million in property damage coverage, which is part of the general liability. It's not a huge deal, but it is something that we need to be aware of as we're writing these policies. A lot of the municipalities require to be listed as additional insureds on the policy. So that's definitely something that we can handle. But outside of that, we've seen that the municipality insurance limits are pretty equivalent to what the MRA is requiring. So with that, I wanted to jump into beyond licensing. So as I mentioned at the beginning, you are required to purchase insurance before you open your doors, which is a little bit backwards for most business owners. Most of the time, you're not purchasing insurance until you're actually open and operating. But once you get that final license, then that's when the real insurance is going to kick in. And that's when it's really important that you sit down with your insurance provider and your agent like myself and really talk about what coverages are needed. So I've created a list of things that I wanted to talk about. And so we're just going to jump in and go through them. And like I said, Tatiana, if there's any questions or anything like that, feel free to stop me. The first one is property coverage. And this is a big one because what happens is sometimes our clients will sign a lease and they don't have to buy building insurance or they don't have to buy property insurance, but they have to get the insurance that's required by the MRA. So what they'll do is they'll get the MRA insurance and then they forget that they have to insure everything else. So what property coverage is going to do is it's going to provide coverage for your building if you purchased that. If you didn't purchase it and you're a tenant, a lot of our clients, especially cultivators and processors, and we were even seeing some huge build outs on the provisioning center side, but they're putting a lot of money into the tenant improvement in the space. And that is something that we can insure. So the tenant improvements, if you don't own the building, all of that stuff that's inside the facility. So the way we view business personal property is if you were to take your facility and dump it upside down, everything that were to fall out of the building would be covered under the business personal property. And that's another one, whether you own the building or not, the business personal property is going to be a pretty significant coverage for all businesses, especially cannabis businesses. Loss of business income is another big one that we're talking to a ton of our clients about. And this would essentially pay or replace the income that the business is used to receiving in the event of a covered claim. So as an example, if our client were to suffer a fire loss, let's say, and they had to be shut down for 6 months, loss of business income would pay to replace that income that's lost so that they can maintain their employees, so they wouldn't have to be out their employees all going and finding new jobs and other operating expenses that are ongoing, even though the business is not generating revenue. Inventory is another huge one, and we're going to talk about some of the caveats that are involved with inventory coverage. But essentially, this is going to cover finished inventory at a provisioning center. Processors have finished inventory that they're processing to get ready for sale. And then even cultivators, the flower, once it's harvested and it's no longer living plant material, that would be covered under that finished inventory piece as well. So that is definitely something that we can insure. Crop coverage is another huge topic that we're talking to all of our clients about. We can provide indoor crop coverage. It's a limited policy form, meaning, it's a very specific named perils policy. So as long as what occurred to the crop was listed as a covered peril, then there would be coverage. There's also outdoor crop coverage. It's in the private marketplace, but it is something that we can discuss and see if it's the right fit for those outdoor cultivators. One of the coverages that I always talk to about with my secure transporters is cargo coverage. So once the transporters pick up the product or cash from the licensed facility and transport it to another facility, the transporter is now in possession of that, and it is their responsibility to insure it. So that cargo coverage is going to be a big piece for them as they're moving product. Equipment breakdown is another big one. So that's, covering all of that equipment that these cultivators and processors are putting into the facility. And then finally, crime is another big one. So employee dishonesty would be picked up under crime. And when you are dealing with a cash heavy business, employee dishonesty and crime coverage is huge. So that's a really brief rundown of some of those coverages that you would want to make sure that you're discussing with your agent once you are awarded your final license and before you actually open your doors. So you don't want to wait, go through the whole grand opening and have clients come in, customers come in, and then discuss this. This is really important that you tackle before you open your doors. Another one that I didn't really mention is builder's risk coverage. So this is one that we are definitely seeing some of our clients miss out on. And so what happens is, they buy a piece of property and, most times they're paying cash for it because of the financing situation in the cannabis marketplace. And they're putting millions of dollars into these facilities and they're not purchasing builder's risk coverage to cover that property while undergoing construction. So I always recommend to our clients, when I'm talking to them about the first phase of licensing and insurance, what are we doing with this property? Are you going to be undergoing renovation? We can definitely help you with that builder's risk coverage because it's a huge piece and you don't want that to slip through the cracks and then have a loss occur while under construction and not have coverage for something that you're putting so much money into. So I wanted to note that one. So the other piece that I always like to mention, circling back to the product liability coverage. So we had talked about how the state requires $100,000 in product liability coverage, and they require that per license. So product liability is essentially covering the liability of the business for a product that you are either manufacturing, distributing, or selling, and the use of that product. So as an example, as a dispensary, you're applying for one license. It might be adult use and medical. However, that's still technically from the eyes of the product liability coverage, it would be subject to the $100,000 in product liability. At that time, once you get your final license, I think it's a huge missed opportunity if you're not discussing increasing those product liability limits. This coverage is extremely important, especially as the market here in Michigan matures. I anticipate that we will see more product liability claims. And while $100,000 in product liability coverage is great, I think it's important that all of the licensees here in Michigan understand that there's a more robust policy out there for them, and they can really get true coverage if they are discussing those increases in limits, because $100,000, if there's a product liability claim, is going to get eaten up extremely quickly, especially considering the fact that this is going to cover defense costs within that limit. So if there is a claim, $100,000 is probably going to go all to attorney fees at that point, which is not a bad thing by any means, but there is higher limits available to all of our clients. So that was another point that I wanted to mention as we're talking about coverages that are available beyond licensing. The next piece is workers' compensation. So workers' compensation is essentially going to cover three things. It's going to protect the employee and it's going from medical expenses while injured on the job. It's going to cover their work loss. So if they're injured on the job and they can't work any longer, it's going to cover that missed time while they're out with their injury. And finally, it's going to protect the business from a workplace lawsuit. Workers' compensation, it's important to note, is required in the state of Michigan, not just by the MRA, but by the state of Michigan. So this is another piece that is extremely important. We mentioned to all of our clients that when you start to hire, you have to notify your insurance agent, because most of our clients, when we first talk to them, they have no employees. At that time, they're not going to buy workers' compensation unless they're mandated to, because they don't have any employees to cover. So it's extremely important to notify your agent when you hire your first employee that you need to get workers' compensation in place. Not only is this going to benefit the employees, like I said, but it's also a huge protection for the business in the event that there is a workplace injury and you don't want to have a lawsuit filed against you for not having that coverage in place. And there are huge penalties and huge fines that the state will imply if there is no coverage in place. So like I said, it is mandated here in the state of Michigan. You have to have it as a business with employees. So make sure to talk to your agent or talk to me if you have not done so already. The next big piece is delivery to consumers. Okay, this applies to provisioning centers. And this was big during COVID because this is when it all started to happen. So the MRA allowed for delivery by provisioning centers to consumers. The biggest piece in how this impacts insurance is how are you doing this? So there's technically two options here in Michigan. You can have your employees provide their own vehicle, and they can take that vehicle and they can make deliveries on behalf of the company. The second way is to purchase a company vehicle and have all of your drivers use that vehicle to make deliveries. The way that you choose to do that as a business owner and as a provisioning center is completely up to you. However, it is going to impact the insurance. So I just wanted to mention real quick, the company-owned vehicle route, how we would treat that is we would just write a commercial auto policy. There'd be a delivery component to it, but essentially it's just insuring a commercial auto policy. We would list all of the drivers who have access to the vehicle. The policy would be rated on many different factors, but some of the most significant ones would be where is the vehicle garaged at night, how many miles it's being driven, and then the driving record of all of the drivers listed. Now that can really start to add up if you're hiring younger people to do deliveries. As we all know here in Michigan, auto insurance rates are highly driven on age. So if you're hiring a ton of young drivers, especially if they've got incidents on their record, that could drive up the cost. But for the most part, if you've got clean records and not 18 or 21-year-olds driving the vehicle a ton, we found that these rates are extremely affordable for our clients. The next route is having your employees drive their own personal vehicles on behalf of the business. Now, we would not provide insurance for those vehicles. What we would do is we would write a liability policy to protect the business for the use of a vehicle that they do not own. So it's very similar to a pizza delivery company. It's called a hired and non-owned auto policy. And basically, again, we're not insuring the vehicle, we are insuring the business while employees are using their own personal vehicle on behalf of the business making deliveries. So if there was an accident and the employee was found at fault and there was a lawsuit filed, this policy would kick in and provide liability protection for the business. The other piece I wanted to add on the delivery to consumers, and it's been a mixed bag. Some of our clients have been really focused on getting this coverage, and a lot of our clients have said, you know what, it's such a small amount, I'm not going to worry about it. But the property inside the vehicle. So you want to have that conversation with your insurance agent or myself. If you're going to be having large amounts of property inside that vehicle, while doing deliveries, you may want to look to see if you can get coverage for the property while in transit. So that's just another piece. It's really going to depend on the company that you're insured with and the limits that you have. And do you own the vehicle or is it a non-owned vehicle? Those are all going to play parts in whether or not you can get coverage. But it's definitely something to have a discussion about and just make sure that that's something that you are good with not insuring or insuring if that's the route that you decide to take. The next thing I wanted to jump into was just a brief overview of the market availability here in Michigan. And by market, I mean insurance market and carriers that are actually insuring in the space. So there are very limited amounts of insurance companies who are insuring cannabis businesses here in Michigan. It's extremely important as a cannabis business that you are working with a cannabis insurer. I'm not talking about me, myself, as an agent. I'm talking about your insurance company. And we see this occasionally where the licensee will get placed with a non-cannabis insurance company. And that can cause issues in the event of a claim. You may be paying a little bit cheaper of a rate, but if there is a claim, there could be grounds for denial. And the last thing that anybody wants to do is pay insurance premiums and not have proper coverage in place in the event of a claim. So I talked to you about the limited amounts of carriers because what that means is there's not a lot of options. And working with myself or working with another agent who specializes in cannabis, chances are we're going to go to the same marketplace. There's probably about 5 or 6 companies who are actually providing coverage in Michigan. And with that, not all of them would be available to a cultivator or a dispensary or a secure transporter. There's some companies that would do really well with dispensaries, but not so well with cultivators. So when I'm marketing out a risk, I typically approach 3 different markets. Whereas if we're insuring a restaurant, we've got a lot of options. So I just tell you that just to keep that in mind as you are working through the insurance quoting process. It's not like insuring a regular business. And I say regular loosely. It's not like insuring a standard line business like a restaurant. Unfortunately, insurance carriers standard markets have not entered the space yet. So we're really working primarily in an excess and surplus lines marketplace. So what that means for you as a licensee or as an operator is you don't have as many options available. But as the market continues to evolve, we do continue to see more and more carriers come into the space. So I'm hopeful that, we will have strong carriers continue to enter into the space, especially as the laws evolve across the country. The next thing I wanted to talk about is policy forms. Again, not going to go into a ton of detail because policy forms might be even more boring than just talking insurance. But policy forms are essentially what comes with the actual policy. So your declarations pages might be 10 pages long, but your policy might be 200 pages. Those other 190 pages are the policy forms. And it's important that you review these. And I say that to everyone, and I know that it's brutal, but I say as a business owner, if you are not going to review them, then you need to hire somebody to review them. Because I can tell you on a high level what's in there, but I can't explain and just talk to you about what is in 200 pages. I could do it if you wanted me to, but most of my clients don't want to sit there and listen to that. So again, I mentioned it is extremely important that you review the policy that you're purchasing. There are going to be exclusions in there. Very important exclusions. And there are going to be risk warranties in there. Just a couple examples. Every cannabis policy that you purchase is going to have a warranty on there about how you're storing inventory in order to have theft coverage. Every policy is going to have a warranty on there that the only way that theft coverage will be in place is if you have an active central alarm system that is set during non-business hours. If that's not set, there will be no coverage. So that's just like two very simple examples, but they're extremely important. Think about that. If you bought an insurance policy and you didn't read it and you didn't know that you had to set your alarm every night. Now, granted, there are other reasons why you'd have to set them. But aside from that, if you didn't know those things and you had a break-in and the alarm was not set for some reason, you would want to have coverage. And if you didn't understand the policy that you purchased, there could be a very big disconnect there in the event that a claim did occur. So I say that because I see a lot of times a lack of understanding of what's in the policy. And that's not just on the insureds, that's also on the agents. I've seen some agents who've never written a cannabis policy before, and they are used to writing standard business that does not have warranties on those policies. So the lack of understanding goes with to everybody. Just making sure that we know what we're writing and we know what we're selling. And as a client, you know what you're buying. New companies are coming into the marketplace. I mentioned that previously. However, with that sometimes comes new markets that don't maybe have the best processes on writing policies yet. I mean, we've seen carriers come into the marketplace and we're all excited about them. They've got great rates and they've got huge capacity limits. They can write big buildings. And then we get the policy and we're astonished at what's been put in the policy that was not disclosed at quoting. So again, there are new carriers coming into the marketplace, but it all goes back to reading the policy. If we wouldn't have read the policy when we got it and reviewed it and made sure that there weren't any, errors, we would not have seen these big exclusions that were not disclosed during quoting. So I'll get off my high horse there on the policy forms, but it's a big one. So when you buy insurance, make sure you're reading the policy, make sure, and if you don't want to do it, hire an attorney, talk to your agent, make sure that you are understanding what it is that you're purchasing. I wanted to talk very quickly about some limitations in the marketplace, just so as licensees continue to enter into the space, they understand some areas that may be of concern that you may want to spend a little bit more time addressing. The biggest one is the total insurance value limitation. And what this is a lot of the cannabis companies that are writing business here in Michigan, they have a maximum that they can write at any one location. So what that means is if you've got a huge building, and let's say you need $10 million in building coverage, and then you've got $5 million in crop and $2 million in inventory, a lot of companies can't do that. They might be able to write it, but they're going to say the most that I will write, or the most that we will pay out in the event of a claim, is 10 million or 5 million or 8 million. So it's, again, we go back to what I said before about quoting in the standard market. It's not like quoting in the standard market where there's really not a lot of limitations in terms of total insurance value. When we're talking cannabis, the companies don't have the capacity that they normally would. So if you're building out a huge facility, keep that in mind as you're going through the insurance process, that you may run into those, that cap, and something that you may need to think about and address. The next one is the cargo piece. For secure transporters, you definitely want to make sure that you are accurately insuring the amount of cargo that you're going to have in your vehicles. And we've got companies that are providing coverage for cargo and property in transit, cash in transit. But you just want to make sure that as a secure transporter, you are ensuring that, because imagine if you had a loss. I mean, that could wipe out all of your coverage for the year if you didn't have proper limits. So definitely something to think about. And I think that's all I had on the limitations. We talked about the warranties within the policy. I talked to you about the alarm requirements. Another one is electrical requirements. So we've seen where insurance companies are requiring that a licensed and insured electrician perform all electrical work, which is pretty common. It's not anything unusual, but the fact that that is a warranty within the policy is something that we don't see every day. We're also starting to see sprinkler testing reports. So if there's a sprinkler test or a sprinkler system within the building, we are seeing insurance companies want to see testing reports to show that the sprinkler system is working properly. There are also safe and vault room requirements. So if you are in the process of building a safe or a vault room or a safe room, it's very important that you talk to your agent beforehand. I can't tell you how many clients of mine build these beautiful rooms, but they don't comply with the vault requirements that the insurance companies place. So again, really important that you are having these conversations up front. I always recommend as you're going through the build out phase, talk to me so we can go through what it is that's going to be required of you to make sure that your vault room is approved. Or if you're using safes, each insurance company has safe weights and hour rating requirements in the event of a fire. So you just want to be aware of those as a business owner. And then I just wanted to touch on some additional insurance products that we are seeing in this space. They're very similar to any other business operating in the country, but for some reason they're expensive for cannabis businesses, and a lot of our clients are hesitant to purchase them because of the price tag that's usually associated with them. However, they're extremely important. We talk to all of our clients about them. Just wanted to give you like a brief rundown of a lot of the ones that we're talking about right now. The first one is employment practices liability. So this is going to cover lawsuits that are filed against the business for wrongful termination, discrimination, sexual harassment. And with the way that our country has been going in the past couple of years, this has been an extremely important coverage to purchase. The next one is equally as important, I think probably more because we're seeing more and more data breaches happen, but cyber coverage is a huge topic. We have markets that are insuring cannabis companies. We're seeing cannabis companies be targeted for data breaches. So, you know, I talk to every client of mine that I'm talking to, I'm emphasizing the cyber piece because a lot of our clients think, well, that won't happen to us, but it's happening to all of us. Any business is subject to a data breach, and when it occurs, it's extremely devastating. So along with purchasing an insurance policy, making sure that you have proper processes and procedures in place to prevent those is going to be vital for these businesses. Directors and officers coverage is another big one that we're having conversations with our clients about. We're doing a lot of quoting. I will say for cannabis businesses, it is expensive, but if there's a board of directors and officers of the company, this is a huge one that most investors are going to want to see of cannabis companies. Professional liability is another big one. We work with professional liability markets really, especially for our safety compliance facilities, our labs. The professional exposure there is huge. So that's really pertaining to the lab space. And then the last one is employee benefits. We're seeing more and more of our clients start to offer employee benefits to really become competitive in the hiring workplace. So that is something that we do offer here at our agency. And we're seeing that will become very, very popular. Finally, I just wanted to talk a little bit about some of the claims that we're seeing. That's the third piece that I wanted to talk about today. Just kind of talk to you about what we're seeing in the market so that way you know what's happening and can properly prepare. I would say the number one claim that we're seeing right now is thefts and break-ins. And this is happening across the board. When I talk to my clients about this, they're like, oh yeah, it's probably happening in like Detroit and Flint. It's happening everywhere. The small towns, the big cities, you name it, it's happening. And most of our claims have been smash and grabs. So people are taking a vehicle and they're running it through a building and trying to grab as much as they can. That's why the vault room and the safe is so important, especially if you've got inventory in there. But we're seeing most of the damage be done to the buildings themselves. So, you know, a lot of our clients are like, okay, yeah, I don't keep a lot, or I've got my safe in the middle of the building. So that way, I won't be hit too hard. But a lot of the damage is just repairing the building from having a vehicle go through it. And like I said, this is happening in big cities, small cities, far away from big cities, you name it, and we're seeing it happen. We've also seen some fire and some smoke damage claims. Those have not been nearly as prevalent as the thefts and break-ins, but we have seen those. We've also seen water damage. So, a plumbing fixture breaks and there's a leak. And then we've also seen slip and falls. So that's where that general liability kicks in. You've got a customer who's visiting the dispensary. They have a slip and fall outside and lawsuits filed. So, I mean, we've seen all of those across the board. We've seen a ton of workers' compensation claims, but that's going to happen as your workforce grows. Employees are going to get injured on the job. So it's important that you have best practices with regard to employee safety within your facility. But we are definitely seeing those claims. And, the commercial auto piece, whether it's delivery, we've seen delivery accidents, we've seen damage to vehicles, secure transporters have had accidents out there. But yeah, I mean, that's really sums up the different types of claims that we're experiencing. But I would say the number one claim, again, emphasizing, is those theft and break-ins. And just want to make sure that you're properly protecting yourself from those as a business owner. I think that's all I had. I don't know if there's any questions, but that was pretty much all of my topics that I had.
Well, thank you so much for that information. I'm sure our attendees are taking lots of notes and getting lots of insightful information. One question is, a lot of the viewers and participants are in the very early stages, even in the business planning stage. I know that this is probably a very wide-ranged question, but if they're looking at putting together budgets, is there like a round number that you would recommend people looking to when it comes to budgeting for cannabis insurance?
My answer would be no. I don't want to give a blanket number because it's really going to depend on the license. However, I have talked to some clients for 5 years. We talked to them at the very beginning and they still don't have their license. They're still going through the process. I can give budgeting numbers to clients, prospective clients, people at the very, very beginning. And I do that all the time. But it's really going to be specific. I'm going to want to know, are you buying a building or are you leasing? Are you going to own vehicles? How many employees do you think you're going to have? What are you going to be doing? Are you going to be cultivating in a 50,000 square foot facility, or are you going to have a 3,000 square foot provisioning center? I need to know more details. And then once I have a clearer picture, and that's typically like a 10-minute phone call, I can give more budgeting like ranges. But a blanket across the board, it's too hard. There's too many different factors that go in to give like just, if you're a cannabis business, budget $50,000 a year. Like I said, I would be happy to have those phone calls and those conversations and gather a little bit more detail so that way I can get them a budgeting number.
Got it. Okay. One thing that you mentioned earlier is that there is somewhat of a short list of agencies or partners for cannabis businesses. Someone in the chat asked, is there a list of those companies available?
Is there a list? Probably not. I think that that's one of the benefits of working with an agent that understands the space is, who are the companies? Now, if I've got a client that calls me and says, hey, who did you quote my renewal with? I'm more than happy to tell them who I'm working with. But I personally don't have just like a big list of companies that I work with, only because, like I mentioned before, some companies will only insure dispensaries. Some will only insure a building that's being leased to a licensee. Some will only do, labs. So, I would hate to give like a big list of, 7 companies, but then not all of them actually do what you're looking for.
Yes. One question, it says, will there be a percentage needed to establish insurance?
A percentage of what? Do we know?
It doesn't say, but I'm assuming maybe is there like a percentage of funds needed to pay up front?
Okay. Most insurance policies in the cannabis space require 25% down. And that's 25% earned. So what that means is if I've got a client who, we see this happen a lot with municipalities, like use it as example, Pontiac. Okay. So we had a lot of clients applying in Pontiac. The city of Pontiac said you have to provide proof of insurance. Some of our clients took that as I have to buy a policy, but I don't know if I'm going to get a license. Can I cancel it if I don't get a license? Yes, you can cancel it, but the insurance companies are all going to keep the first 25% of the premium, whether you cancel tomorrow or 2 months down the line. 25% is earned to the company. So with that being said, almost every insurance company, it requires 25% down.
Got it. Are there companies that write for over $5 million in coverage in regards to limitations?
Yes, definitely. Yeah, $5 million is not a cap for us. We see $10 million with some companies, but we've got other companies who will go higher than that.
Got it. Well, you know, my personal question,
Yeah.
and one that gets asked to me a lot, is in regards to cannabis insurance for events.
Yes.
And we just had Andrew Brisboe on for an event that I did a couple weeks ago, and we talked about it. And at the time, we had limitations as to the number of people who could attend cannabis events and things of that sort. In less than a week, that has changed quite drastically. But can you just talk about the landscape for event coverage in this space?
Yes. So that is, as an insurance agent, probably one of the most frustrating, excuse me, one of the most frustrating pieces of insuring in the cannabis space, because if there's consumption and it's broadcast that there will be consumption, which most of these events are broadcasting that they're consumption because everybody's so excited that we can do consumption, insurance companies shy away. So the last consumption event that I was able to secure coverage for, it was a recent one, and it really boiled down. I had two markets, and one market was only willing to provide extremely low limits. And the other carrier was able to provide higher limits, extremely high premium, and really limiting policy form coverage. So, I wish I had a better option out there for consumption, but I think right now with where the market is as it pertains to insurance companies, if you're going to host an event, I would say you need to go into it knowing that you're probably not going to get top of the line insurance coverage, and you're probably going to pay a lot of money for it.
And so to break that down in layman's man's terms, I get it's a lot of money, and I'm assuming that means it's a lot of liability on you. Meaning, if a claim does come, those limits that you said will come in place, and anything over those limits, you're basically liable for. Is that correct?
Yeah, so that more so though the exclusions within the policy. So like I'll give you a couple examples. The one that I just wrote, there was a bleacher exclusion. So if there was any bleachers or grandstands and somebody slipped and fell, there would be no coverage. There's assault and battery exclusion, firearm exclusion. So if there's going to be any security there, we recommend to our clients that they hire that out third party to make sure that that third party company is able to get assault and battery coverage and firearm exclusion, and then list our client as an additional insured on their policy. Product liability, no coverage in that scenario with this client because of the company that we went through. They specifically excluded product liability coverage. So if somebody consumes a product and gets sick or does something at the event, no coverage.
Got it. Okay. We have a couple more questions. What about micro businesses, meaning sell, grow, process, and package under one license?
Yep.
Different is this policy?
So it would be right now, it would just be the same policy that we would sell to other clients, but the limits are going to be a lot less because it's going to be a smaller facility. They're going to have less plants there, less inventory there. And, I don't want to say that they're sales are going to be less. But when you think about a smaller facility, you think the revenue is going to be less, and some of the insurance carriers will rate their policy based on revenue. So it's the same type of coverage for a micro business. It's just going to be typically less premium.
Got it. Well, I'm not seeing any more questions coming through the chat. But again, just wondering if you are early in the phase, you said you talk to clients who are at least 5 years out. What would you recommend as kind of, early preliminary steps, either for those who are very early on, or they've maybe even gotten pre-qualified and they're now, really starting to go through the process? Any recommendations, checklists, resources?
Yeah. So from an insurance standpoint, I say the earlier the better. Reach out to me. We can jump on a quick call. We can run through what you would need and the potential costs. I mean, I just did this with a secure transporter. They were early on in the stage. We walked through every line item and when they would need it, when to reach out to me, when they would need to purchase it. So they had like a clear roadmap as it related to their insurance portfolio. So I would say when you're serious about starting to generate your business plan and really start, talking that through, give me a call, shoot me an email. We can go through those steps. We wouldn't go through an actual application until you have a location and like a business name, but to start planning from a budgeting perspective, I would say earlier the better. I mean, even before you have a facility is not too early.
Got it. Okay. Well, thank you so much. Again, we would like to thank our host, MICIA, for being the partner of the Homegrown Detroit program. Next week is Memorial Day, next Monday. So we will not be convening this event, but our next one is actually scheduled for, I'm going to share my screen real quick, for June the 7th. So please join us June 7th at 4 p.m. Same time, same place, and we will be learning about business planning 101 with Tom Hamp. And you'll see here some of the things that will be shared and learned in that session on June the 7th. Thank you again, Amanda, for agreeing to do this afternoon, and have a great and wonderful week.
Thank you.